Good morning, ladies and gentlemen. My name is Ryan Suter. I'm one of the senior investment managers here at Sharewise, and we're here this morning with Sunstone Metals Managing Director Patrick Duffy. Now, Patrick's been kind enough this morning to lend us his time and expertise regarding Sunstone. So, as usual, we're going to kick things off with a presentation on Sunstone from Patrick, and then we're going to open the floor to a Q&A. Ladies and gentlemen, if you'd like to submit a question for me to ask Patrick, please do so through using the Q&A function on Zoom. And then once we're in the Q&A portion of the webinar, I will ask away. Patrick, thank you very much for your time, mate. The floor is all yours.
Okay, thanks, Ryan. And thanks, Sharewise, for having me today. Sunstone has two large copper and gold projects in South America. These are both huge in scale and has the potential to be company defining. El Palmar is in the north. It's got a exploration target of 15 to 45 million ounces, which we announced in October, complementing a maiden resource of 1.2 million ounces. Importantly, it's sitting at surface and can be developed as an open pit. In the south, Bramaderos, which is an ideal postcode in South America for development, looks like shaping up as an open pit opportunity, also already a resource of 2.7 million ounces and an exploration target of over 7 to 13 million ounces. Both at Sunstone, we have a new team that's come in, highly energized, track record of developing projects of this scale, and we have an ongoing partnership discussion process that we're working through at the moment to be able to bring in a JV partner for one or both projects to help unlock the full value of these huge projects. I mentioned our team. There's been a number of additions in the last 12 months. I joined in April, along with Neil O'Connor, who I work with at Xstrata. Neil was Chief Legal Counsel at Xstrata Copper for over a decade. Lucas Welsh has joined the team as previously CFO of St. Barbara. Malcolm Norris, who was our long-term CEO, has transitioned to our non-executive chair. And I'm very pleased to be working with Malcolm. Malcolm and Bruce have an amazing career of major discoveries around the world for these types of large porphyry gold and copper projects. I've joined the company last year, previously with Red 5. Over a 5-year period, we took Red 5 from a $60 million market cap up to a $2.5 billion market cap on the back of the success of King of the Hills gold mine that we built in WA. I'm relatively new to Ecuador, but in the time that I've spent there now, having done a number of trips, it's a beautiful country. The people are very warm and cordial. Feel very safe there. My interactions with government, they're highly professional and really committed to building mining in Ecuador into a major industry. There's a number of projects that in Ecuador that are ready to start building in 2025. Key component of Ecuador is low costs. Labour costs are a quarter of what they are in Australia. Energy is half of what they are in Australia. And there's two world-class large gold and copper mines that are both lowest quartile as a result of that environment. Just drilling down on the two projects, El Palmar in the north, you can see tropical environment, but mostly agricultural land. There's no protected areas or native forests on our concessions. The project is fully permitted for drilling. We have a very supportive community that are familiar with mining in the area. It sits on this Tawachi fault zone that's prodigious. There's just neighbouring huge copper deposit owned by Codelco, or Lurimagua. Further away is the SolGold Cascabel project, huge project that sits on that fault system, and many similarities with what we have at El Palmar. Many of the major mining companies in the world have concessions in this area, and we've seen Hancock investing heavily in some of the concessions near to our project. At El Palmar, we have this resource, 1.1 million ounces, that sits at surface that we announced in October. And these two huge porphyry fingers that come up from deep up to surface that sit below that open pit. That exploration target I mentioned is 15 to 45 million ounces. That's a huge tier 1 type deposit, potentially producing 400,000 ounces over many decades. It's an amazing project to have in our portfolio. We put this diagram here to help just demonstrate what it all means in terms of taking that midpoint of the exploration target and comparing it to similar scale mines around the world. A good one there is Boddington, owned by Newmont in Western Australia, probably the most valuable and best quality mine in Australia, but similar grade, similar tonnage to El Palmar. Lundin Mining, that has these 3 orange circles here. They're flagship assets for Lundin Mining, all in South America. You can see similar tonnage, lower grade, but highly valuable mines in South America for Lundin Mining, which is over a $10 billion market cap. And a number of examples there of lower grade, high tonnage, open pit deposits that all compare favorably with El Palmar. Heading south down to Bramaderos, I mentioned at the beginning, it's ideal postcode here in the Andean Mountains. Our projects are in the base of this valley. You can see these hills that are full of copper and gold and silver. It's 900 meters above sea level, very easy to access. It's adjacent to the Pan-American Highway. Very supportive community here in southern Ecuador. They're looking for mining to bring prosperity to the region that's otherwise quite a poor area. This map of Bramaderos on the left, you can see the concession with the black circles. That's where Brama Alba, our initial resource, and these other circles that shape up into a U form that one day will be a large open pit gold and copper mine. We had some news in November, which was the discovery at Copete there in the bottom right corner. Another excellent high grade copper gold deposit that complements what we've seen at Melanol and Brama Alba. And in the top right, you can see Limon, which has been a focus in the last 12 to 18 months, a new discovery, higher grade tonnage, higher grade epithermal system, which there's a breakdown of some of the drilling. We've had some amazing hits, 185 meters at 3 grams, 124 meters at 2 grams, shaping up very nicely as a standalone deposit. Critically, we see this as an opportunity to get into production as a smaller mine, 150,000 ounces gold, silver over a 10-year period to get us into production, and then develop the bigger, broader porphyry system, which would take us up to 400,000 ounces over time, mine for 20, 30 years, and a huge opportunity. Fortunately, we have gold and copper commodities. Gold continues to go from strength to strength. We're seeing just overnight another spike. It's already $40, $50 higher than it was last week. But just the geopolitical tensions continue to help support gold. Seeing the election and the inauguration with Trump last night, and clearly there's more volatility to come. Many countries are stockpiling gold reserves. We've got the interest rates starting to fall, and will continue to drive the gold price higher. And copper is a key commodity. Again, last week we saw the news of Glencore and Rio Tinto in discussions about Glencore's second largest copper producer in the world. All the major mining companies are positioned to secure more copper supply, and there's certainly consensus now, I think, where it's going to be very difficult for copper supply to keep up with copper demand in the decades ahead. Finally, to summarise, 2 huge projects. If they're in Australia, they'd both be top 3 gold mines. We're today valued at $9 per ounce. Relative to our peers, that's incredibly cheap. We expect that to be $30 to $50 per ounce and grow from there. We saw research come out this week from MST, a very credible research company in Australia that has a target price on us, 2.3 cents relative to our current share price of 0.7 of a cent. So many times multiple on that. And that's excluding the future upside of converting more of that exploration target into a resource. That's it, Ryan, and we'll take questions from here.
Brilliant. Thank you for the presentation, Patrick. Found that really informative. Now we'll just shift to the Q&A here. I've got a couple to kick us off with, and then we'll shift to the registrant submitted ones. Now, first of all, just to touch on what you finished with, obviously MST initiated research on you guys last week. Now, you mentioned a valuation of around 2.3 cents compared to what you're currently trading at, which is around 0.07. Realistically, where does that place you as a market capitalization for full valuation for the company, and what ultimately were the main findings that draw for this valuation increase?
Yeah, so they've got a valuation of $140 million market cap valuation relative to our market cap at 36.
Yep.
It's conservatively based only on our resources declared today, which is the 4 million ounces. Potentially, if you take those exploration targets, it could be anywhere from 5 to 15 times the size of that resource. So there's huge upside potential. And again, you look at our peers, we should be trading much higher than what we are on dollars per ounce. If we were producing gold today, we'd be making a $1,500 per ounce profit margin, and we're valued at $9 an ounce. It doesn't just it's very cheap, and it's a great opportunity to be investing at these levels.
Yeah, brilliant. Thank you for that one. Now, obviously, with both projects having the potential to be a lot larger than what you currently anticipated, assuming these projects are ultimately built into new mines, what sort of potential production are we looking at these mines once they've developed? And essentially, can you just run us through a bit of a timeline from once the projects are formally greenlit to when you guys start digging stuff out of the ground?
Yeah, okay, that's a good question. But yeah, both have the potential to be producing at least 400,000 ounces per annum.
Yep.
El Palmar is probably at a scale again to what Bramaderos is. Bramaderos be producing that rate for at least 20, 30 years, with lots of other opportunities to bring other targets into that. And El Palmar could be mined for 40, 50 years at that 400,000 ounce per annum rate. Again, if they were both in Australia, they'd be top 3 mines. If you were producing 800,000 ounces per annum, if you look at some of the ASX and TSX companies, you'd be a $5 to $15 billion market cap. So incredible opportunity. Very lucky to have these two high quality assets. From here, with further drilling, and that's part of that partnership discussion, helping unlock that drilling equation. But once those resources at an economic scale, it'd be a 2 to 3 year permitting and study phase, and then another year or two to build. So I expect sort of early next decade we'd be in production at those levels.
All right, well, brilliant. Thank you for that timeline there. Now, I just want to draw back to the presentation. Obviously, I can see a couple of questions that have come through. Bit of an elephant in the room obviously comes down to partnership. So it's going to be pretty closely linked to the cash balance on the books at the moment. Can we just kind of have a bit of a discussion regarding how that partnership process is going to, and whether you can share with us any more information with the investors today?
Yeah. Obviously, limited on how much I can say. We do have a data room open. There's a number of companies in that data room. We've already had site visits for a second round of site visits coming up very shortly, and working our way towards an agreement on one or both projects, potentially a corporate opportunity. But yeah, it's still the way to go there. Trying to maximise the sort of competitive tension that we have to get the best outcome for our shareholders. We've taken a lot of steps to reduce our cost base, so we're minimising the cash spend at the moment to give ourselves enough room to be able to negotiate the best outcome we can for these partnerships.
All right, we'll really appreciate the update on that front. Just to pivot here to something probably more personally focused for yourself. Obviously, the senior leadership team across the board looks like it's had a fairly fresh start within the kind of 6 to 12 months. Can you just give us a bit of a run through what your previous roles are, Patrick?
Yeah, sure. No, as I said, it's a great team and very bench heavy for a company of this size, but also reflects the opportunities with these two projects. Previously, I was with Red 5. I mentioned Western Australia, we built King of the Hills. Prior to that, I was with Glencore and Xstrata for 10 years. I was in Asia and the Pacific. We built Koniambo nickel smelter, which was a $7 billion project, 6,500 people on site during that construction phase. I was Director of Strategy and Performance for Glencore during that time. Prior to that, in the Philippines, and working on the development of the Tampakan project. I was CFO of that project, but that was a $6 billion development project, still unbuilt. Glencore eventually sold that project. and prior to that was Hong Kong. But again, worked on a number of these projects of scale, have had a huge amount of market exposure with my time at Red 5 and building Red 5, and complemented by a really very qualified and committed team at Sunstone.
I really appreciate the kind of synthesis you did there, Patrick. It was good to see a bit of a kind of a LinkedIn profile update. Now I'm just going to pivot here to the questions submitted by the registrants. Now, first one here is obviously pretty interesting and topical at the moment. Now, obviously, a couple of mines located, in South America. Can you give us a bit of an update, some information on the political landscape, specifically in Ecuador, and potentially what impact an Australian election has, and potentially, whether any impact the US change of power could potentially have?
Yeah. Yes, absolutely. So Ecuador, as I said, I've lived in Asia Pacific for 10 years, relative to, say, New Caledonia or the Philippines. I think Ecuador is a much more straightforward, cleaner sort of legal jurisdiction. Importantly, there are elections coming up in the next 3 or 4 months, national elections. We have a very, very supportive president at the moment, Noboa, who's looking for re-election. But irrespective of whether he's appointed or the opposition, both need mining to be able to drive economic development in the country and help sort of build the balance sheet of the country. Your second question about Australia and elections in North America, I think I touched on just the inauguration last night with Trump. Couldn't get a more volatile first 24 hours, but that just feeds into the sort of further geopolitical instability that we've seen in the last 2 years, which has been a backdrop to gold performing extremely well. The BRIC nations, China, Russia, elsewhere, have all been deliberately building these gold reserves. There's talk of a gold-backed alternative currency to the US dollar, which is getting a lot of attention at the moment. And again, I think that actions being taken by Trump are only going to probably accelerate that. And then in terms of the Australian environment, there's probably no direct impact with Ecuador that I see, but there's Australian companies, obviously the big base metal producers, and some of the smaller companies, Hancock, are all present in Ecuador, and that Andean copper belt is where all the major copper gold deposits are in the world. It's an amazing prospective location, and we've got 2 great projects there.
Well, thank you for the update. Now, I think we've just got one more before we can wrap things up. Now, the one I've got here, you might need to bear with me with. Now, the participant has asked, what steps are you taking to convert the exploration target to resource, or to further tighten the range of the exploration targets? Now, secondly, how long do you expect to keep the exploration target on the books?
So if I understand it correctly, so Bramaderos, the initial focus is being able to get Limon into a resource. So there's a target of 1.9 to 1.7 million ounces, a higher grade deposit to the porphyries, and a very important piece of the puzzle. We've done 17,000 meters of drilling so far. We probably need another 10,000 meters to be able to have a meaningful resource for Limon. We saw that discovery at Copete, and as part of the porphyry story, it sits outside the exploration target. But we, at the right time, and ideally with the partner on board, we would be back drilling at Elba, Melanol, and Copete, and converting that exploration target into a resource. So I don't think we will withdraw the exploration targets. We would just be looking to convert them progressively into a resource at Bramaderos. We have an expectation at least 10 million ounces at Bramaderos. It's an incredible prospective location. And same for El Palmar, looking for a partner to help unlock the huge potential there. Ideally, develop it into an open pit opportunity first. So targeting 6 to 8 million ounces for that open pit, and then to be able to drive deeper exploration, which is more expensive and takes longer once we're into production phase at El Palmar.
All right, well, thank you for the update. Now, we've just had one more that has come on in. Participant asks how much more drilling costs are required to convert the inferred resources to enable a PFS to start?
Look, that's subjective, and I assume we're talking about Bramaderos and Brama Elba.
I presume so.
Yeah, so I would add a guess, maybe $30 to $40 million to get that into an economic resource, to be that able to do strong studies around that would be sufficient.
Well, thank you for that clarification. Now, before we just wrap things up, Patrick, is there anything you'd like to leave us with?
No, I think I've done my best to highlight the value. Incredibly cheap and frustratingly cheap, but there's huge returns to be made if we build momentum, and looking forward to a big 2025.
All right, brilliant. Well, thank you very much for your time this morning, ladies and gentlemen. And thank you very much this morning for your time and expertise, Patrick. Really appreciate it. Cheers.
Thanks, Ryan. Thanks very much.